The Japanese rice traders gave us the benefits of seeing what the signals and patterns were that showed us great reversals. As we can see, there was two big bullish haramis that told us the selling had stopped. Plus, this wild oscillation was another indication that the Japanese rice traders had identified over the centuries, that when you start seeing this big indecision, whether it's on one day like a doji or on a few days with up and down trading, that tells you there's probably going to be a change of investor sentiment. The T-line is also a very beneficial indicator telling us what the trend's going to be doing, provided it comes up through the trend and stays up above that trend. In this case, once it came up to the trend or the T-line, we had a bearish harami, a hanging man, and then a shooting star type signal right on the T-line, which the shooting star doji told us what we wanted to know, which is a very simple factor of candlestick analysis, that they're going to move it in the direction of how they open it after the doji. In this case, when we woke up this morning and the pre-market futures were down big, we knew that the T-line had failed and that we were heading probably down. How far down? Well, now that we know the fact that we know that the bearish J-hook pattern has a potential of wave 3 to the downside being the equivalent to wave 1, this should have told us that if they failed the T-line, we wanted to be going short. The failure at the T-line was much more evident in the NASDAQ when it gapped down on Thursday at the same level it opened the previous day. If you're in an uptrend, they should not be trading back down at the previous day's open. That doji right on the T-line, a gap down, had us set up for a possible bearish kicker signal, bearish kicker derivative signal. When it failed the T-line, that told us we better see it open positive and trade positive on Monday, or if there's any weakness, they have failed the T-line. Obviously, today's free market futures indicated that. Knowing what the market direction will be also makes it very simple for identifying which chart patterns on individual stocks will be good for shorting or going long. In this case, we recommended ITRI as a short on Sunday night on the basis that if it opened weaker and the markets were weaker, we had a bearish J-hook pattern setting up. Same scenario as on the indexes. If this is wave 1, wave 3 should be heading on down. Knowing what the stock market is doing also provides insight into specific commodity trades. For example, live cattle yesterday, or on Friday, I got the days all mixed up. Live cattle on Wednesday sold off hard, came back through the T-line after a hanging man and a doji. Was it going to bounce back up? The live cattle seems to work in correlation with the market. The rationale being that if the market's strong, people are buying good beef or steaks. If the market's going down, they can't afford it, the prices go down. This made for a very good short trade today in live cattle. That'll be it. We'll see you in the chat rooms.